Hello, my name is Edo and I would like to present you Occidental Petroleum Corporation. Occidental Petroleum Corporation is an American Houston-based company that engages in acquisition, exploration, and development of oil and gas properties in the United States, the Middle East region, and South America. The company operates in three segments: oil and gas, chemical, and midstream marketing and other. As every other oil company, Occidental is heavily dependent on industry trends and oil prices. In recent period, those trends are shifting. US was the biggest importer of oil, but now US can satisfy 90% of its energy needs from domestic sources, while other countries ramping up production that causes oversupply in oil market. OPEC nations did not lose their influence, but it is clear that their influence is dropping. Putting together, domination of OPEC is past, but they remain one of the largest forces in oil industry. Difference is that now they must share that influence with other players. The International Energy Agency raised its forecast of 2015 global oil demand, also rising long-term demand. Considering all that is going on, it is safely to assume that oil prices will recover in mid and long term, but it is unlikely that they will be on the same level before the collapse. Operating cash flow for Occidental Petroleum will cover dividend outlays and growth capital program by fourth quarter 2015 at around $60 per barrel. Occidental Petroleum has consistently created economic wealth by generating CFROI above its cost of capital while allocating additional capital to business. CFROI levels are strongly correlated with oil prices. CFROI peaked in 2008 at the highest level in the company history but went down with oil price crash. Also, CFROI recovered in later years, the latest oil price crash, posting negative values first time in 20 years. Sales growth is consistent with sector median and depending on oil prices. Operating margins are almost double than sector average that put Oxy in a flexible position concerning low price environment. Asset terms is more likely improve in coming period due to the recovering in the sales growth and a reduction in invested capital. Main drivers of revenue growth will be production in Permian Basin, Al Hassan gas project, and Occidental Chemical Ingleside ethylene cracker. Occidental is the largest producer and operator in most lucrative U.S. oil land. Forecast growth roughly 9.2% from 2014 to 2015 and 12.1% growth from 2015 to 2016. Al Hassan gas project is one of the largest natural gas fields in the Middle East. At the full run rate production, annualized operating cash flow is expected to be 300 to 600 million depending on commodity prices. Occidental has a strong cash position. Company spun off California Resources, sold its interest in a BridgeTex pipeline, and monetized its position in Plains GP Holdings. This all left Occidental's year-end cash balance at $7.8 billion, which exceeded $6.8 billion of total debt. Also, Occidental has low level of leverage that gives them flexibility in low price environment and they improved interest rate coverage. Company cut its capital budget for 2015 for 33%, but raised production as a result of lower finding and development costs. Most of investments will go in domestic assets, Permian Basin. HOLT default scenario implies strong CFROI in 5-year period followed by moderate asset growth rate, resulting warranted price with upside potential of 48%. Considering pessimistic scenario, those inputs resulting in 21% upside potential. Considering 70% probability of HOLT default scenario and 30% probability for pessimistic scenario, I come up with a realistic scenario that resulted in warranted price of $95.8 with 40% upside. Occidental Petroleum, like all other major integrated oil companies, has had difficulties since oil price crash. Occidental lost around 35% of market capitalization, now is trading at $68.42 per share. Those are the main reasons for recommending Oxy. Strong presence in Permian Basin can generate significant cash inflow even in a low price environment. Al Hassan gas project will generate substantial cash inflow. Occidental organic finding and drilling costs are coming down while production is increasing. Strong cash flow and low leverage. Dividend yield well above industry average. Considering all said, I believe that Occidental Petroleum will outperform in the long run and recommend stock with upside potential of 40%. I would like to thank Credit Suisse and Project Firefly for this opportunity.